Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, April 16th. Hope you guys having a great day so far. We got a few economic data to go over. Like every Thursday, we do get the initial jobless claims for, uh, people basically it's people applying for unemployment for the first time. And of course, these are last week's numbers. So the previous week it came out at 6.6 million. Forecast for last week was at 5 million, and it came in at 5.25 million here. So slightly higher than expectations, but lower than the previous week's data. But again, still that's bringing us much closer to that 20% level we were talking about for unemployment. Right now, we're probably in between 15 and 20% unemployment right now with the current standing here. So that's something that definitely we want to watch going forward here. Now we got a couple of housing data here. We'll start off with the housing starts from the month of March. So the previous report back in February was at 1.564 million housing starts. However, the forecast was supposed to be a bit of a dip due to obviously the coronavirus. Was supposed to come down to 1.29 million, and it came at 1.216. So obviously a lot smaller than shortage, greater shortage than what we had expected. Same thing with building permits. For the most part, we got 1.452 million for the month of February, and we were expecting a pretty big dip down to 1.25, and it dipped, but not quite as much at 1.353 million people. So these are kind of future housing starts with the building permits here. Last but not least, Philly Fed Index. This is manufacturing in the Philadelphia region. Yesterday we saw manufacturing in New York region, which was basically at a 40-year low, and this is basically the same thing, 40-year low here. We had back in March a minus or contraction of 12.7, and forecasts were calling for a 37.5 drop, and it dropped 56.6 on its index. So pretty bad numbers here overall for the most part here. So let's take a look here at the headline news. Stocks are a little mixed. They did start off down earlier. They are improving a bit. Dow was down further and is starting to approach its par level. So it was down I think at least 100. Now I'm seeing it's close to like maybe minus 20 right now in that range. So things are getting a little bit better, but it's taking a lot of its cues off some talk about possible reopening of the economy. And President Trump might be talking later today in regards to a plan about reopening parts of the economy. And they're kind of doing this on a global level. So a lot of the places in Europe and everything else are now talking about trying to reopen bits of their economy. Now, of course, they're trying to do this in a situation where we don't have a second wave of this virus, where we don't have this coming back and hurting a lot more people and infecting a lot more people. So they're trying to do this open economy, but yet also try to do it in a safe manner here. So we'll have to wait to see what the plan states. But again, that's kind of helping a little bit with the stock market. Let's see how the bond market is doing. Bond market's up a little bit. We're up about 19 basis points currently. We're up slightly higher, but 19 basis points, so that will translate slightly better in pricing for interest rates or mortgage rates, which is good news for those who might be refinancing or might be in the middle of buying a property. We got yields. We're down again. We're down to just a rate base right here at the line here at 0.6, at 0.6 here on the 10-year yield here. So again, something to watch. We're kind of in that no man's land, so got plenty of room to go upwards or downwards. So there's really not a whole lot of pressure on mortgage-backed securities. We're getting kind of propped up still by the Fed. The Fed is doing a great job and buying just enough, kind of like a Goldilocks effect, where not too much where it's going to overheat and hurt banks for margin calls, but just enough to kind of keep it at an even level here. So, they've been kind of tapering off their purchases. We had that one week that was getting on hand where they're buying about 40 billion a day, and then they dropped down to about 20 billion. Now they're dropping probably right around 10, between 10 and 15 billion a day. So just in the kind of prop it up a little bit. All right, so that's pretty much the wrap for the day. If you guys are in California or looking to buy a refinance, please reach out. We can certainly help you guys out. We got a lot of programs we're still working on. We're still helping out clients. We work with many different investors, so a lot of investors are out there, or lenders are out there putting a lot of restrictions out there, but we know we can help you navigate to find those that can give you the best pricing as well as the best get your loans actually done. So just feel free to either direct message me or email me right down here in the red. Email is the quickest turnaround time, so just let us know what your scenario is, and we'll see how we can help you guys out. All right, you guys have a great rest of your day. Thanks so much for watching. We'll see you in tomorrow's video. Bye bye.